Hey folks, Rachana Ranade here and I welcome you all to a super duper interesting shoot and release video which is about Jane Street versus SEBI. SEBI recently came up with a 105-pager interim order wherein they mention that they have reportedly earned, Jane Street has reportedly earned 36,502.12 crore rupees in profits from 1st January 2023 to 31st March 2025. And believe it or not, majority of this profit has been done in the futures and options segment. Now you might be like, Rachana, but SEBI has only come up with a report which says that 90% of the people almost make losses. How on earth have Jane Street made a profit in spite of all these things? Maybe that could be one of the reasons why this bell might have rung in SEBI's head, and that is the reason why they might have started these investigations. Of course, there are some other reasons as well. You might have read it in news or in multiple articles. Today, we are not going to focus on why they started the investigation. That is not our core part. Our core part today is understanding the key points, the highlight points of the 105-pager SEBI order. Now, you might be like, Rachana, today's setup is a little bit different. We can see one more laptop here and you also have one more laptop here. What is the whole scene? Because my intent is to actually show you the order, the 105-pager order, and I have to show you the relevant page numbers. That is the reason why I have written all the page numbers here, so that it is easy for me to directly show you the order. I haven't by hearted the pages, right? So let us start. Hopefully, I'll be able to do this in a one take. Me and my team, we have taken a lot of efforts to summarize this, to try and explain you a pretty difficult thing that they have done in the most simplified manner. So let's get started. Okay. So I'm going to go into the teaching zone first of all to make you understand that what was the modus operandi, how did they actually pull this off. Now, what have they done? They have done majorly all trades. Major trades were done on expiry days. So expiry trades is what they were mainly attempting. Okay. Always they took bets. Achha, by the way, if you were to understand this fraud, ideally you should have some knowledge about futures and options. Okay. I'm still going to try and explain what exactly goes into what in F&O, but try and focus 100%. Okay. On expiry days, basically they have said that market will go down. Market is again Bank Nifty. I may say the market inadvertently. I actually mean to say Bank Nifty because the whole fraud has actually been done in Bank Nifty. The alleged fraud has been done in Bank Nifty. Okay. So they have done all the bets. Bets as in Bank Nifty will go down. Now tell me, if they believed that Bank Nifty would go down, they can have two options. Possibility number one, they'll do a call short. Okay. Possibility number one, they'll do a call short, or possibility number two, they'll do a put buy. Now this is what you need to know. Okay. Simple till here. If they are betting that market will go down, they will either do a put buy or they will do a call short. Now what happened? Whenever they took trades on expiry day, did the market actually go down till the closing? Did Bank Nifty go down till the end of the day? Answer is yes. Did they win? Yes. Did they earn a lot of profit in options? Yes. I will be like, oh, nice. They bet, they won the bet, and that is how they minted money. What's wrong? Now, if my trade direction goes right on one expiry day, fair enough. 2 expiry days, fair enough. Every single time, if my direction is going exactly right, that probably is not by fluke. There's a great chance that this happens by manipulation. So it's not by fluke that Bank Nifty is going down. I am the one who is ensuring that Bank Nifty goes down. See, whenever I'm saying I am ensuring, I am saying that I am Jane in this example. Okay, right? Simple till here. One last quick time. I am betting that Bank Nifty will go down, but it is not going to go down by fluke. I am going to make it happen. And how? That is exactly what we are now going to understand as a modus operandi. So now, how did they do it? So first things first, what did they ensure is on the expiry day, they bought stocks. They bought stocks. Which stocks? Obviously banking stocks. They'll buy a lot of banking stocks in the opening trade. So actually what they have done this entire fraud in 2 phases on the same day. Phase 1, leg 1 is where they buy stocks. Listen to this carefully. They buy stocks. Which stocks? Banking stocks, which have a good weightage in Bank Nifty. Quickly tell me, If banking stocks go up, what will happen? Bank Nifty will go up with me. If banking stocks go up, Bank Nifty will also go up. Now you can imagine something like this, or expiry day, Bank Nifty is going up. Maybe it has also gone above some key resistance level. That is where everyone will also start buying. Interest will go up in buying. Okay, now tell me what happens. Now here again you need some basic knowledge about F&O. If Bank Nifty is going up, the call premium will go up. So call premium will go up, and typically for puts the premium will go down. Okay, simple deal here. Call premium will go up, put premium will go down. Now as a call seller, see, I'm going to do this. As a call seller, I would love to short a call when the premiums are on a higher side. Okay, so I will sell calls. See, I have told you, call short, I'll sell calls when the premium actually goes up. Okay, and I would also buy the puts when the premium options go down. Simple till here. Yes, fantastic. Okay, now let us understand. Okay, agreed, Rachana, they might have bought the banking stocks. Now listen carefully, and now I'm going to show you the actual order. They might have bought banking stocks, because of which Bank Nifty went up. But seriously, one FPI buys banking stocks, and because of it Bank Nifty goes up. How would that be possible? And for that I'll have to show you the volumes with which they played this. And for that I'm going to take you to page number 15. Okay, page number 15 of the order. Achha, oh, by the way, sorry. Before I go here, if you want to check this, page number 1, you can see, I told you, 4 entities. These are the 4 entity names. Okay, this is how the entire, see, I also told you it's an interim order. And that is the interim order, you see the entire index, Okay, chalo. Now let us go to page number 15. Now you can see a table here. Okay, I'm going to just show you the relevant extracts. Now you can see which stocks have they bought. HDFC Bank, ICICI Bank, Axis, SBI Code, all these are part of Bank Nifty. Okay. Now what is really important for us? Don't focus on all these points. Okay, focus here. Focus here. Array, I can't. I want you to focus on the last 2 columns only. Okay, or in fact the last column only. That is the most relevant. Okay, Jane's buy traded value relative to market wide traded value means what? Let's say market wide traded value in ICICI Bank is 100. Okay, out of 100, how much are these guys buying? 23.33. That's why 23.33%. Out of the total traded value, Jane Street in itself is buying 23% of the value of ICICI Bank. Axis Bank 24%. Or so you can imagine the volumes that they are playing with. They are using pure money muscle power. It's not only muscle power, it's money muscle power. 23% of the total traded value, 24% of the total traded value, 25% of the total traded value for something like what? SBI. Now you only tell me, if they are buying all these stocks of SBI, stock futures of SBI early in the trade with huge volume, out of 100, they are buying 23, 24, 25%. Ideally, will these stocks go up? Yes. If all these stocks go up, bank index obviously will go up. Okay. Now you are saying, Achha, only because of volume can they go up? That will play a major part. Okay. But I'll now take you just, maybe it's just a little bit down. I want you to understand this now. One more point. It was not only volume, they also played with the price. How? Understand this. I'll give you an example of ICICI Bank. Okay. Now what has happened with ICICI Bank? Number of buy orders entered. How many buy orders were entered? 15,316. Now tell me, if you are a sane buyer, logical buyer, Achha, what will I do? Whatever is the LTP, I would want to bargain. So ideally I would place a buy order just below that, because I would want to buy it at a lower price. What are they doing? They want to take the prices higher. If the prices goes higher, then only Bank Nifty will go higher. Okay. Then only others will be like, it's going up. Okay. First leg is about आशा बढ़ाओ सबके मन में. First leg is about taking the market higher. Second leg में उसको गिराना है. Second leg में we have to take it down. Okay. So first leg, example, ICICI Bank, out of total 15,316 buy orders, 7,368 buy orders were above LTP. Means if the price of ICICI just hypothetically is what, let's say whatever, 900 rupees. I don't remember the exact latest LTP of ICICI, hypothetically 900 rupees. They are saying 900, we are ready to buy at 905, we are ready to buy at 910, 915, whatever. Even if we are talking about orders at LTP, this is 6,318. And orders below LTP, which is very logical, is only 1,630. Okay, one last example quickly for SBI. Out of 12,692 orders, 12,000 may say 6,000 are below LTP, are above LTP. 5,600 are at LTP, only 1,000 below LTP. So please understand, in the first leg, what did they intend? They wanted to buy stocks, they wanted to buy stock futures. They are doing this with two things. Number one, volume game. I showed you the volume. Almost 23, 24%, 25%, they are only buying. And how are they able to do this? Money power. Okay. And second thing, what are they doing? They are buying that at a price which is above the LTP. Simple. Okay. Will that push the prices higher? Yes. And once, now I want everyone to tell me one last time, if they are buying stocks, if they are buying banking stocks, Bank Nifty will go up, call premiums will go up, put premiums will come down. Now okay till here? First leg of the story is clear? Yes? Pate? Clear? Yes, he is saying yes. One person from my research team, CA Akshay Pate, he has also done a lot of effort in this. And he is also here in the shoot today. Okay, so clear till here, na? Yes. He is saying, I have only done the research. Why are you saying clear till here or not? Okay. Now, let's go on to the second half of the story. What has happened till now? Till now, everyone is happy on expiry day. Array, stock prices are going to go up. Stock prices have gone up. Bank Nifty has gone up. Ab asli khel hai. Because now I want to ensure, because I have collected a higher premium. Now I want to ensure that now Bank Nifty has to crash. That is the whole game. How will I ensure that Bank Nifty will crash? Simple. Who has the banking stocks? Majority of the banking stocks are with Jain. Now, what is to be done in the second leg? Tell me logically. Tell me logically. What is to be done in the second leg? Exact opposite positions. So, instead of buying banking stocks now, what are they going to do? They are going to sell the banking stocks. Correct? If banking stocks are sold, automatically what will happen? Bank Nifty, instead of going up, of course, it is going to go down. Okay. Did they really do this? We have to prove, na? Just because Rachana is saying they sold banking stocks, did they really do that? Because of that, did the stocks really go down? I am going to show you. Now I am going to take you to page number 37. Yes, mostly page number 37. Let me just check one more time. Page number 34 maybe. 34. Okay. Now you can see sell start time. When have they started selling? They started selling from mid-noon, 12 roughly, till 3:39. Okay. So this is the second half of the story. Now what is the important point? Again the last chunk. Jain Street's traded value relative to market wide traded value. Out of 100%, how much are they selling? 25% in ICICI Bank. HDFC, now they are smart. 22% HDFC they are selling. Much more selling is happening here in HDFC, and HDFC is a heavyweight champion. Once HDFC starts to fall, Bank Nifty is going to start falling like anything. ICICI Bank, out of the total volume, 25% they are doing, 25% of Axis they are selling, 25% of SBI they are selling. Look at the selling, mad selling. Everything is done by Jain Street. Okay. Now they are selling banking stocks. If banking stocks are being sold, Bank Nifty will go down. Correct? Is it only because of the sheer volume? No. Now they are also playing with the price. How are they playing with the price? And for that, I think we'll have to go down a little bit to understand this. Yes. Now tell me, logically, if you are the seller, you would want to sell it at a higher price or at a lower price? You would want to sell it at a higher price. Simple till here. Now what have they done? What do they want? They want that the stock price should crash. And that is the reason why. Look at this. Number of sell orders, almost 11,389. Out of that, 8,780 orders are below LTP. So let's say a stock is trading at 100. They are saying stock is trading at 100, but I want to sell at 95. Lower and lower prices is equal to the stock is going to go down rapidly. Correct? Out of 14,000 sell orders, 8,000 are at below LTP, 5,000 are at LTP, and above LTP only 772. So here also it's a volume game plus selling at lower prices. Okay. So what will happen when when the stocks start going down, Bank Nifty will go down, and that is where we started the entire discussion, that they had bet that Bank Nifty will go down. Okay, what was the initial bet? Bank Nifty will go down. How did they ensure that? By selling crazily. How were they able to sell? Because they bought in the beginning. Okay, will be like, Rachana, okay till here. But how much they might have earned in premium? So you have to remember this. Initially they have done a call short. They have collected a higher premium, and if the stocks really start to go down, if Bank Nifty goes down, if they close OTM, actually call premium will go to near zero. We'll check whether it has gone to near zero or not. And put premiums will towards the end spike up like anything. We'll check what has happened, and I'm going to show you actual figures. Okay. And for that, I'm going to take you to page number. Is it page number 37 or 26? I think it's going to be page number 26. Let's check page number 26. Ooh, yes. Okay. Now, focus. Important point. Here you can see open. So now again we are on first leg. I am taking you back now entirely from options perspective. First I told you about stocks. I told you about the overall Bank Nifty. Now I am going to tell you the impact on option premium. Understand this. Bank Nifty open value is 46,573. 46,500. Remember this. 46,500 is open value. Till 9:22 in the morning means what? First 7 minutes. First 7 minutes. From 46,573 to 47,176. Almost 500 points. 500 points up. 400 points up almost. Okay. And that is where people will say, oh, the 47,000 mark. Nahi, jasti ga. 500 to more than that. Acha, 600, 700 points up. So, you can see here that now the analysts will start saying that we have broken the crucial level of 47,000 and this, that. The premiums will ideally shoot up. Okay. First, let's understand about call option. At open, call option was 198. Can you see this? At open, call option was 198. By 9:22, this column, last column. From 198, it has shot up to 458. Oh my gods. Okay. So, they might not have sold the call when the premium was only 198. They might have sold it at multiple levels like these. And they have collected the premium. So, let's take example that they have done only for one. Even if it is one, they have collected 458. Okay. And what have they bet? That Bank Nifty will go down. If it goes down, if it closes OTM, it's going to go to near zero. 0.65 paisa. When is this happening? At 3:39. Have they made a lot of money? Yes. From 400, 500 rupees collecting the premium. See, always remember, call seller collects premium. Okay. So, from collecting a premium of 400 to 500 rupees to paying while squaring off only 0.65. See, if you don't understand this, imagine this in a ulta way. Imagine this in a upside down way. It's as good as you buy at 65 paisa and you sell it at 458 rupees. Crazy. Just imagine the percentage returns. And for put, they bought it at what? See, opening was at 229 and it kept on falling and falling and falling and falling till 72 rupees and 70 rupees at 9:22. Imagine this, the put opens at 229 and it decays to 70 rupees in the first 7 minutes. They buy at 70, 72, 65, whatever, and same day at 3:39 they are squaring it off at 734, 10 times almost. Crazy amount of money they might have made. And how much crazy amount of money I have already told you, na? 36,502 crore rupees. Isn't this maddening? This is. Now, I am going to take you to one more very, I hope now the whole story is clear. The whole story is about betting that market will go down. Okay. Market did go down. They did make a lot of money in options. Till here it is okay. But now the big question, I am going to take you to page number 44 now. Page number 44. I am telling you that they have done this only on, majorly they have done this on expiry day. They'll be like, Rachana, are you sure? Expiry day. Example, what SEBI has given. 17th January 2024 was an expiry day. Look at the volume here. gross total volume or gross traded volume 10,658 crores versus other than expiry day 2,000 crores, 2,500 crores. Okay, and on expiry day it shoots up to 10,657 crores. So this is very clear that they have done this as a part of their expiry trading strategy. Now we are coming to almost the grand finale part. Big question. This is an intraday index manipulation strategy. Why is this really called as an intraday index manipulation strategy? See, you said that they bet that market will go down, the market went down and they made a profit. Where is manipulation here? Manipulation is that market is, as in Bank Nifty, didn't go down by fluke, they made it happen. How did they make it happen? By pumping and then dumping, right? What are they saying? Dealing in multiple segments across cash equities, stock futures, index futures and index options simultaneously is certainly not by itself a breach of any regulation. Whatever we are talking about, dealing in multiple segments, that's not a breach of regulation. However, what sets apart the trading pattern of the JS group as described above as prima facie being manipulative, it is the intensity and the sheer scale of their intervention. Intensity, I told you, while buying they are buying at higher than LTP, while selling they are selling at lower than LTP, and sheer scale of their intervention. You remember 20%, 23%, 25% of the trading volume JS is doing. Intensity and sheer scale of their intervention in the underlying components, stocks and futures market, the rapid reversal of these large and aggressive trading in cash and futures. What was the rapid reversal? I told you, na, 65 paisa and 400, 500 premiums. You remember that? Without any plausible economic rationale. Why did they buy HDFC? Why did they buy ICICI? Because of some repo rate and CR. They just wanted to ensure that they pump in the morning and they dump in the afternoon. There was no economic rationale. Other than the only rationale was the concurrent activity and their impact on the positions in the Bank Nifty index options market. That is where they are saying that this is why we consider this to be a manipulative thing. I hope all the important points are clear till here, and if you feel that, bichare Jain group, if just by one thing, were they immediately they are taking out such an interim order? No, they have given, this is now I am taking you back to page number 2. Entire event, what happened in April 2024, July 2023, August, October, Now comes an important point. On February 6, 2025, they had issued a caution letter and they had told them to refrain from undertaking certain trading patterns. See, initially they have done all these checkpoints and they felt that something is going wrong. They said, don't do some things that we have observed. We are giving you a caution. Now on May 15, 2025, in disregard of the caution letter from exchange, what is Jain saying? हम वही करेंगे जो हमारा मन करता है. We are doing disregard to SEBI's order. What they did is they still continued with it, and SEBI observed that they still continue to run very large cash equivalent positions in index options. SEBI is saying, ego hurt ho gaya mera. I have given you a caution letter, still you are doing the same thing. And then what they are saying ultimately, last part, now they are saying, what is SEBI's demand? SEBI is saying 4,843 crore. Itna to we feel it's an identified unlawful gain from the alleged misconduct. So even if during the shoot and release part video, even if I have said fraud, it's an alleged misconduct. Okay. Jain Street is instructed to deposit this amount into an escrow account with a scheduled Indian bank. But Jain Street is responding to that. We dispute SEBI's funding. They are saying we are disputing this. We are not going to agree right away. But we will continue engaging with the regulator. Jain Street is committed to fully regulatory compliance globally. Okay. But what is so special in today's order? Special is that this is a rare move against a foreign entity. Whatever SEBI orders are released till date, we go through them, but this is a very rare instance that SEBI is taking an action against foreign entity. So super happy that SEBI is actually looking into this in depth, in detail, because please understand that F&O is a zero-sum game. What do I mean by that? The moment they are saying that we have identified 4,843 crores worth unlawful gain, there are retail individual investors and other institutional investors maybe who have lost this money. Someone loses is equal to they are winning. This is the crazy part of it. And it's not only the other investors who are losing, there could be some people who, or some companies who could also face the heat, someone like Nuvama. Nuvama was a domestic trading partner of Jain in India, and that was the reason why stock reaction, it fell by 9 to 11% in one session due to the revenue disruption fears. You might be like, why Angel One got disrupted? Why other brokerages got a hit? Of course, if now you can imagine, out of 100, 24-25% volume was done by Jain. If they only stop, then there is a great chance that the overall volumes may dry out. If volumes dry out, brokerages income, brokerage houses income could take a hit. Exchanges income could take a hit. So please understand that if I am talking from a short term perspective, could it take a hit on brokers, on the market and all that? Yes, from a trading volume perspective. Does it impact long term investing? Nowhere. Long term investing is not impacted, okay? But short term trading, F&O trading, that could be impacted. I hope you have understood the entire video. I had intended to do this video in 15 to 20 minutes, but when I go into the explanation zone, I do repeat some things which I feel that yes, this needs to be repeated so that it is drilled into the mind of the viewer. And I can see that this is roughly a 25-minute plus video. But I hope you enjoyed this. I hope you found a lot of value in this. I have tried to just show you the exact SEBI order. I've actually shown it on screen so that instead of you finding time to go through the entire 105 pages order, I've explained what did Jain do, why SEBI felt that this is something which is manipulation, and ultimately what is the impact.